Let's focus in then on the all-important IPO, that's SBI Life, which has closed a mega $1 billion issue, the largest that we've seen in 7 years. As it closes today, let's hear it then from the management. Arijit Basu, Managing Director and CEO, SBI Life Insurance. And in fact, right now, he is with us on the show, joining in, and congratulations, because we have definitely seen a very strong response as well. Can you give us a sense as to, the message as well that you would like to give out to investors right now as the mega $1 billion issue is closing? What exactly would you like to, tell investors about the overall growth projection of the company?
Thank you very much. Firstly, I would like to thank all the investors, because the issue we have just found out has been subscribed fully. Of course, on the institutional investor segment, we have a significant 4-time subscription. Retail also is going very strong, and as you know, today is the closing day, and we expect a lot of traction till the issue actually closes. We are very happy that our company, which has been set up 16 years back, has been very well received in the market, and the performance that we have shown in over these 16 years and in the recent past, both in terms of quality and in terms of quantitative growth, has been liked by all investors.
Okay, Mr. Basu, once again, congratulations. It's been a fully subscribed issue and you still have a couple of hours more left. I want to talk to you about the anchor investors, because you've got good response over there as well. But, there are concerns that perhaps valuations are a bit higher compared to, your peers. What's your view when it comes to valuations?
I would not think so, because we decided on the valuation based on the feedback that we received from the investors and the 8 bankers that have been with us in this issue. And as you rightly said, some of the most discerning investors and some of the largest long-term investors like Canada Pension Plan, BlackRock, and so on and so forth have come on the issue because they have liked the business, they have liked the core strengths and resilience of the company, and it is only based on that feedback as to what the right price should be that we have priced this issue. And insurance, as you know, is a long-term business, and as we keep on growing, going in the same path, we are very sure that we will continue to be able to reward investors fruitfully.
That is definitely, I'm sure that you will be doing that. And with the highest market share in the new premium business, new business premium at about 20%, your overall market share is at about 11%. And if we look at the new business premium growth for FY17 at about 43%, tell us, how do you plan to further increase the market share, and what is the outlook for the new business premium growth? Do you think you can improve the CAGR of 26%?
So actually, the reason why we are doing very well is the fact that there is a lot of potential for SBI Life, both in the bank assurance channel and in the agency channel. In bank assurance, as you know, SBI has a very large number of branches which have still not been fully utilized to the extent that it can be. And our agency channel also has been set up very well by us, and the agent productivity is significantly higher than most of the other players. So what we are internally focusing on is not looking so much at what the competitors are doing or what market share that we gain, but focusing on ensuring that whatever is the potential available to us is properly utilized, and we can reach out to customers with products which they like, with products which are good for them. And I think that is what is helping us not only to grow our new business, but also we are seeing renewals come up, because the quality of the sale is what affects persistency, and it is because of the twin growth in both revenue and in persistency that the company is seeing good profitability and growth in embedded value, which is being liked by investors.
Okay, let's talk a bit about your product mix. You have well, nearly 50%, par products at about 11%, rest non-par. Any changes more likely? And also, how will the mix between group as well as individual products shape up?
In the first quarter, if you look, there has been a slight change. The traditional participating products have gone up to 15. ULIPs are down at 49. Just to explain, the product mix is again not something which we drive. We offer certain products, and depending on what is being picked up by the customers, the product mix is a consequence of that. Just to explain, I think say 3 or 5 years back, we were not able to reach out to the HNI and affluent sections for whom the demand is more for ULIP products as compared to traditional. They typically reside in the metro cities, and their demand is more for products that they understand. So, I think we have been able to reach out to this segment better in the past 1 or 2 years, and we hope to continue that. But at the same time, I think we do not want to lose the massive advantage or the reach that we have in the tier 2 and tier 3 cities, where perhaps ULIPs will not be picked up so much. And ULIPs, as you know, typically tend to have a slightly higher ticket size because wealthier individuals invest in it. So, if you look at the number of policies sold, we sell much more traditional policies, but as a consequence of ULIP ticket size being higher, we find that the ULIP proportion is at around 50%. Our belief is that it will settle at somewhere around this level or a little lower, that is ULIPs could be at around 45% and traditional could go up as a consequence of the demand that we are seeing from customers.
Right. And you have one of the least total cost ratio at about 11% versus some of the other insurance payers. What is leading to the lower cost beside, of course, having a strong bank assurance partner like SBI? And do you think that this is sustainable?
So, the cost ratio being lower is a consequence of the distribution efficiency that we are seeing across both the channels. So, in agency channel, if you look at it, our agent productivity is significantly higher than any of the closest competitors that we have, and that is obviously leading to a lower cost. In bank assurance also, the number of people in SBI Life who we project for ensuring sales in the bank assurance channel is actually lower than our competitors, and we do it based on a clearer understanding of the bank assurance model. I think we have benefited from the partnership with Cardiff, who actually sell in the BNP franchise in France, and there it is primarily the bank employees who sell rather than the insurance company employee reaching out and selling. So, I think that also helps us in maintaining our lower cost ratio.
So, Basu, just allow us a moment to look at the Nifty at the current juncture. It's below the 10,000 mark as we speak. In fact, 120 points gone. Clearly, the sell-off has extended and it is being led by the metals basket, which is one of the biggest losers today in trade. 10,000 gone, and mind you, we spend a good, I think, 7 to 8 odd sessions above the 10,000 mark, and now it looks like we're really cracking big time in trade, especially given the fact that the last couple of sessions were so muted, so range bound. Today and even yesterday to a certain extent, we did see a big sell-off coming by on the markets. But Mr. Basu, over to you once again. I want to start by talking about also the distribution plan. What's the scope of improving penetration for SBI Life, and firstly within SBI itself, and also SBI is selling about an 8% stake, BNP is selling about 4%. Is there a possibility that we'll see a further stake sale by either of the parties, SBI or BNP?
For your first question, as I explained, the potential in the SBI franchise is huge, and while we are growing very high in the last 2 years at around 45% in the bank, the number of customers we have reached out in SBI is still very small as compared to the total number of SBI customers. So, I think we will continue to focus on them and we should get very good results. As far as the stake sale is concerned, as you know, the free float will go up to 12% now, and another 4% we had sold to marquee investors in December. That will also become open a year from now. So, 16% free float we will have. As you are aware, we are required to take it to 25% within 3 years of this IPO, and therefore, SBI and Cardiff could be looking at a further dilution maybe 2-3 years down the line. But we are far away from that, and we need to examine so many things before any call on that is taken.
And a final question before we let you go is your overall view on consolidation in the life insurance space, and do you have any plans for inorganic growth?
As far as SBI Life is concerned, at the moment we are not looking at inorganic growth, because as you can see, our organic growth itself is quite good, and we are focusing entirely on that. As you know, any kind of opportunity exploration or looking at inorganic growth requires a lot of management time and effort, and we feel that that is not the required strategy for us at the moment. As far as overall industry consolidation, these players have been there, some have been there for 16 years, some have been there only for 7 or 8 years. So, it depends on each of these promoters and each of the foreign partners who are there, and based on that we will see perhaps certain changes. As of now, we do not see much movement.
All right, Mr. Basu, thanks so much for joining us and speaking exclusively to ET Now on your issue, biggest issue in 7 years, and it's been fully subscribed with a couple of more hours to go. Good luck, and we hope to speak to you on the day that SBI Life finally lists.